Hello guys, welcome to the new video. It is in a continuation of the previous video wherein I had taken a trade of 20,100 call wherein I had sold. In fact, I had sold 4 lots at an average price of 149.56. Let's assume it as 150. So as of now, the price is trading at 97.9 rupees, wherein the premium has decayed almost around like 40%, wherein the profit I have gained from this trade as of now is 10,300 odd. And this additional call, what you are seeing far out of the money call options, I had bought it so that the amount required to sell this call will be lesser. If I want to directly sell this call, it will cost me around 1 lakh rupees per lot. So cumulatively, if I sell it 4 lots, it will I require 4.5 lakh around. So if I buy this, I'll get a premium reduction. So I will let you know how much reduction it is there in at the end of the video, and how this far out of the money call option buying will help us in selling the call and getting the lesser amount required. So as of now, let's move to the chart for the same trade, wherein if you see here this line, this is a line where I started making an entry. At this point, if you see here, I found a double top pattern formation. So hence, I once this previous level where it was taking as a resistance, and from there it had fallen up to 110 levels. So after this breakout of this level, I waited around to see if this level will hold or not. So I started making entry after seeing this candle. If you see, there was, let me clear this. If you see this candle, it had taken a huge rejection at the top, and the body, if you see, it was very huge. So I, understood that there was selling happening, in the sense the market was ready to crack down. So hence I started making an entry at this point. On an average, cumulatively, it is around 150. So I was a bit late to enter. So I thought of entering at this point. So I started averaging at few lots at this point and few lot at this point. So from there, it has already decayed almost like from 150 odd levels. It has come to 90 rupees. So wherein the overall decay as of now, it is 150 minus 90. If I do, almost 60 rupees is my profit premium gain, only just because of the Nifty moving in the downward momentum, or it's fine if it even moves in the sideways direction. So as of now, let's go ahead and analyze the Nifty chart so that we'll understand how this premium decay might happen. So if you see, this is a 15 minutes time frame Nifty chart. So as of now, like here, Dow Jones, if you see now, it is in the current market price as of now, it is showing it as around 0.8% fall, and even the Nasdaq is showing around the similar percentage fall. So over here, if you see Nifty 50, the SGX Nifty, or now the GIFT Nifty, here it is showing it as 115 points down. So almost we have closed at 20,133. For me, if it opens around 100 points also, and if it stays around that point, all the premium will come down to zero for me. So even I will show you the analysis for the Obstra, what I had, how I analyzed. If you can make out here what is my break even point, and where I can understand, this is a chart wherein the green portion where it is flat, this is the maximum profit I can gain. The maximum profit I can gain is 29,900. So beyond 20,100, or at 20,100, if the Nifty spot stays at this point, the maximum profit will be 29,000, around 30,000 rupees. So the break even point is 20,250. So even if I move here, even if the Nifty stays around 20,000 or 100 or below, I'll make 100% profit. So let's see. I will let you know where I exit, and what was my reason to exit at that point if the Nifty is not able to sustain at 20,100. I will let you know in the next video. Before closing this video, I will show you the pattern that has formed on a 15 minutes time frame basis. If you see, Nifty has formed a head and shoulder pattern on 15 minutes time frame. So even at the it tried to consolidate at this neckline. This is a neckline. It is called as a neckline, and this is the head, and this is the shoulder, two shoulder. So in the even at the neck point, if you see previously here, there was a support zone. It was trying to take support, and there was a rally. Now even on the Monday closing price, if you see here, almost it consolidated around like 1 hour at this point. The price range was hardly like 15 points. 15 points, Nifty moving in 15 points for 1 hour is, that's what was the consolidation, what was happening, and this head and shoulder pattern was booking under the process. So already we have seen a crackdown of this, and the Nifty has given closing below the neckline. So most probably, we, as the gift nifty is suggesting, that we might open gap down by 100 points. So the levels to watch out for tomorrow's session is, like, if you see, there is a consolidation happening in this zone. I'll mark these levels. So the levels to watch out in for the tomorrow session will be 20,100 is the one support where we have seen a lot of rejections taking around, and the another support is 20,050. So there is a probability that if Nifty opens gap down by 100 points or maybe 80 points, we might see opening it around 20,850, 60, and then even there might be a possibility of consolidation in this zone, as we have seen in this previous uh, zones. If you see, there is a consolidation in this pattern, so similar thing might be expected. And if this 20,050 is broken down, and if it takes again rejection at this point, we can again make an entry in the put side. Or it can be done in two similar fashions. Even if it is taking rejection at 20,100, we can enter at this point. And if suppose the Nifty is breaking the spot level of 20,060, then we can again, after the retest, we can enter, and we can expect a target of 20,000, around 20,000 to 19,980 odd levels. So that's it for this video, and I'll be updating about this trade, what will be the my exit strategy, and how I will be able to adjust if Nifty is sustaining about 20,100 at the end of the expiry. So thank you guys for watching the video, and if you like the content, please hit the like button, and see you in the next video.